Hey, good Tuesday morning, good Tuesday afternoon, everyone. Kip Harrods here with your midday VRA investing update. Uh, if you're with us last week, on Thursday we got the Fear and Greed Index reading of 6, which doesn't get much lower than that, and that typically means back up the truck, as we said then, and that's what we started doing. We're still doing it. Matter of fact, today I started yesterday on this vidcast. Yesterday I said that I thought the lows were in, and I wrote it up today. I think the lows are in. If not for the broad market, and probably so, then at least for most stocks. I've got some I think some data and evidence to back that up. Good day today. Strong open. Can't these strong opens almost never hold, right? Smart money knows that the first 30 minutes of trading does not matter. It's the last 30 minutes, last hour that matters. And that's what happened. We got the big pullback. Now we're marching higher again. I think this is going to be a good day today. NASDAQ is leading. That's what you want to see. NASDAQ's up by almost 2%. SP 500 up 1.4%. Again, they're marching back higher again. Russ 2000 up a solid 2.4%. I'll tell you why that matters in just a moment. These small caps, innovation stocks, Kathy Wood names have been destroyed. It looks like those lows are in. A great parallel to what happened in the dot bomb bust, which I lived through and remember pretty well. Um, Also, the semis today up almost 4%. Is that right? I want to double check that. Let me get that right. The stocks, yeah, 4%. That's so you got the groups leading that you want to lead. Semis lead Nasdaq. Nasdaq leads the market. That's absolutely been the case in this market for a very long time, and that is the way we see it today. I think it's going to continue to be the case. Here's what, in addition to the Fear and Greed Index hitting a 6, remember the AAI survey, Investor Sentiment Survey, hit a 15 3 weeks ago. Okay, again, these are extreme bearish readings that you just rarely see, except at bottoms, at big bottoms. The two other things I wanted to point out to you this morning as well, and that is number one, the Nasdaq, the percentage of stocks in the Nasdaq that are below the 200-day moving average, just hit the third lowest level of all time, lower than even the percentage during the dot bomb meltdown, if you can believe that or not. As of Thursday's close, the percentage of NASDAQ stocks above the 200-day hit 9.89%. Folks, it was 12% at the dot bomb bottom. So this was worse than that. The only two worst readings were the coronavirus insanity lows of March 2020, when it hit 7%, and then the financial crisis lows, the true meltdown lows when the world was ending, it hit 4. Okay, again, these readings all marked significant bottoms. At least, and why does Nasdaq matter? Again, because Nasdaq leads. That's why we key off it so much. The other thing, and I think this is equally significant and kind of shocking. You may have heard this talked about. Kathy Wood's innovation ETF, ARKK is a symbol, has been destroyed. But it's not a recent event. The high was in February of last year. So these stocks have been going down, these innovation stocks, Kathy Wood's names, which really represent the new internet stocks, if you will, compared to the internet bubble, again, from .com days. This is the parallel, and it's very interesting, I think. This group, I ran the numbers this morning. Kathy Wood's ARK from top to bottom of last Thursday, down 77% in 15 months. That's brutality, okay? But something happened on Thursday. It also had a selling climax on Thursday when it dropped to 77% losses, right? And it's been sharply higher since then. But what's interesting is, for those who remember the dot bomb blow up, is that NASDAQ, over almost the exact same time, about 15, 16 months, NASDAQ fell 75% plus. I think it was actually 77% from top to bottom over, again, about a 15 to 18 month period. So there's the parallel. If we just saw the bottom in Kathy Wood's names in the innovation stocks and these high flying momentum names that she loves so much, the future of everything technology wise, then that's going to be a significant low, I think. And so that's how we're looking at it. Again, if it's not the very bottom, we might have we could always have a retest. It'd be good if we did. Have a double bottom, that'd be healthy if we did. But if not, even if we do, I think most stocks have already hit their lows. They've seen their low. Most stocks have seen their lows. And again, it's good to see the leadership of the semis and tech leading here. I think it continues. I think there's at minimum, as we've been saying, a significant bear market rally in front of us. And that means you got a whole lot of people that are short that have to cover and then go long. That's fuel for the fire. That's two transactions to buy on the same side. And then you also have a ton of people in cash. The latest Bank of America report, more people are in cash now than at the lowest era of 2001, which is after 9/11. So a lot of people in cash, a lot of shorts. You have all these big funds that finally capitulated for selling that we saw over the last 2 weeks. Every day it just wouldn't stop. The internals, folks, this is what gives it away. The internals today, they started making the turn last week. They're continuing it today. Even yesterday, when Nasdaq was down 140, the internals were fine, almost essentially flat on Nasdaq, okay, and positive NYSE. Today, 4-to-1 positives on Nasdaq across the board. NYSE also 5-to-1 positive on advanced decline and upside volume. NYSE up volume of 80. I think I just saw 84, 85%. So these are all positive internals under the hood. The foundational strength of the market looks very good. I think pullbacks should be bought here, and I wouldn't be surprised. I wouldn't be surprised to see a really sharp move higher from here. All right, folks, that's it for the day. Have a great day. We'll see you at the close on our VRA Investing podcast. And until then, have a good one. Thanks, everybody. Bye-bye.